Hey guys, back with another video. So this one is called ATO mean business, but it should be ATO are being mean to business. And I'm about to explain why. So basically, I've been in this game for 20 years, and for the first 18 years of those, the ATO have been actually quite a good business partner if you engage with them and work with them. They've always been pretty open to work with you and help you along the way. But in the last 2 years, the goalposts have changed, and particularly in the last 6 months, what we're seeing is completely different from anything we've seen before, and I'll explain to you what we've been seeing on the ground and with other accounts we've been talking to, what's actually happening out there. So, what's the reason for this? So obviously, the ATO have released that they are currently owed over $100 billion. So obviously the government has seen this, and given that they're on a cash grab at the moment, they're doing everything they can to try and recoup as much of this as they can. But the reason for the $100 billion debt, the majority of this $100 billion is owed by small business. So small business is currently in the crosshairs with the ATO, obviously being pushed by the government, which is reflected in obviously the recent budget changes as well. So none of this stuff is new. None of this has come out in the budget. This has all been in place in the past, but this is what they are now enforcing and taking action on. So obviously with the ATO, a couple of things I look for. Number one is lodgement. They just want to see that you're lodging things. So obviously, some people don't always lodge on time. So what they've been doing to encourage people to lodge on time or earlier is they're actually now bringing forward dates. So things like tax dates, potentially normally 15th of May, they're now bringing some people forward to 31st of March, and larger taxpayers even forward to January or December. So next thing they're doing is more frequent lodgements. So think about your BASs. So if you used to be quarterly pay-as-you-go withholding for the tax on your employees, that a lot of people are now moving to monthly. The ATO is forcing to go monthly. They're just bringing forward the frequency of a lot of these things, which again, of course, brings forward the payment date as well. So what they're doing to encourage people to lodge on time as well. So fines. The fines range anywhere from $330 to $1,650, depending on how late the lodgement is. So obviously, if you lodge within sort of a month, they have the ability to fine you $330, but the longer you leave it, the higher the fine could get. Next, so obviously they want to see you lodging things on time, and that's how they're encouraging it by introducing fines. Next thing is payment. So what they're doing to encourage payment sooner to help reduce this debt is they're charging interest now. Well, they always have, but now it is 10.96% calculated daily, and the interest is not tax deductible. So prior to 1 July 2025, we could claim that interest on tax, but we can now no longer claim it on tax. So think about it. So if you lodge late and paying late as well, so they can potentially hit you with a fine and charge you nearly 11% interest, and you can't claim that on tax. So to give you an idea, let's say you're 3 years behind. If you lodge something 3 years, say late, and say it was $10,000 debt, they can backdate that interest for the 3 years. So you most likely get a $1,650 fine and nearly 11% interest on over 3 years. Well, the rate is a portion for each. The rate changed per quarter, but effectively, if you lodge 3 years from a debt 3 years ago, say the debt was at $10,000, you would potentially be up for about 15 grand. So rather than paying the $10,000, you would now potentially have to pay 15,000 because of the fines and the interest being charged on that one. So what they're doing now with payment, so if your debt is there and you don't actively engage with the ATO with that debt, in some situations at the moment, if it's over $100,000 and if you're not engaging with the ATO, they can report it to credit agencies, which can affect obviously your credit score when going for finance. So obviously that seems crazy. So in the past, like I said, the ATO had been a good business partner in the past because we hadn't seen, it was pretty rare they would charge the fines and some interest, and when they did, we could always write them a story to explain the situation, and they were always pretty good in remitting all of the interest and penalties anyway. So it was always, they were good to work with, but now the game has changed. In the last few months, and including us and other accounts that we're speaking to, we have written to the ATO to explain the situation on a few clients around this, and they have been rejecting it. So in the past, they have rarely hit people with fines, and some interest as well. But now they are charging you fines and they are charging interest, and we cannot get it right. So this is where the game has changed with the ATO. So they really want people to lodge and at least engage when they pay on time. So if you go on a payment plan, that's fine, but just be prepared that you will be paying 11% interest and you can't claim it on tax. So they're encouraging people to use their own funds to get bank finance of some form to pay the ATO to help reduce this debt at the moment. So that's just lodging and paying, what they're doing to get their money sooner. But obviously they have seen that they want more money, obviously with the recent budget changes. So what they are doing behind the scenes as well, the audit activity, the areas they're focusing on at the moment is super for employees. So this has always been a thing, but they're red hot on that at the moment because of single touch payroll. They're getting all the information. All they have to do is go to the super funds and say, has this employee been paid, yes or no? If they haven't, you can expect a letter pretty quick on that one. So FBT, this is a huge area for them at the moment. So again, chatting to other accountants, there is a lot of activity around this one. So in particular, if you think, so say if you're a tradie with a dual cab ute, obviously normally it's 100% business, but given that this day and age, those utes are generally used as a family vehicle on the weekends. So what they're doing now is they're going to tourist hotspots. So you think if you go to a caravan park or holiday areas, you'll generally see a dual cab ute with the signage on the vehicle. There'll be a caravan or a boat or tents and that attached to it. They're obviously using it for a private use, and the ATO are looking at this. They're going to these tourist hotspots and doing so. When you look at the cameras around the place that look for license plates, the ATO is getting that information, and they're asking people, actively asking people now, what were you doing here? Was that for business or not? And they're checking to say, have you adjusted for the private use for these trips that they are now getting evidence of? Next one is rental properties. Obviously, hot topic at the moment, rental properties. So what they're doing now is they're saying that if you use that for private use, so if you're staying there yourself, if you're not actively trying to rent it, if it's a holiday home and if you're keeping it not rented for a couple of months of the year, they want to make sure that you're apportioning those costs for that percentages. So if you've got a rental property, if you're staying in it for 3 months of the year, they want to see that you're adjusting for that 3 months of costs for the year as well. Data matching. So what they're doing, they're obviously going to a lot of different providers at the moment and getting information. So whether that be like the FPOS providers matching sales amounts, or they've even seen a real estate trust account amounts on rental properties. We had a client where the property was in the name of a trust and the real estate had put it in the individual's name, and they got a letter saying you haven't reported properly, we're going to audit you. And obviously if they actually had done their homework, they would have realised the property was in a different name. But this is the type of activity that we are seeing at the moment. So really they're red hot on looking at audit activity now because the government has awarded them a lot of money in the couple of last federal budgets to really get money, not just chase this money, but try and get extra money. So last one, increased enforcement. So none of this is new. It's just that the ATO is now acting on this. So they've always had the ability to charge fines and interest, but they've always been really good. As long as you talk to them, explain the situation, they've been really good to work with. But obviously now the goalposts have changed and not many accounts having much luck. We are still having some success, but generally from chatting with other accountants, there's not much luck getting the fines and interest removed at the moment, and there's a lot of increased audit activity because they're now using AI, and obviously using AI, they can pump out letters left, right and centre to get more money. So this is where we're at in 2026. See what happens in the future.